Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, and it's March 16th. Hope you guys are having a great day, hopefully a great weekend. These are troubled times, so we're starting to see a lot of businesses closing as we proceed. I guess depending upon where you guys are located, but here in LA, we're starting to see a lot of restaurants and everything closed, schools closing, everything else due to the coronavirus. So we'll see how this plays out in the markets and stuff. Let's jump ahead. We do got one economic data to report, and that is the Empire State Index. This is manufacturing New York region. So back in February, we had a pretty good month at 12.9. However, in March, we're starting to see some effects with the coronavirus, and it dropped. This is its biggest one-day drop at 21 and a half. So it's a pretty big drop there. Uh, so let's move on. Stock market is down again, way down actually. Dow's down about 1,600. It's off of its earlier lows due to they actually had a close. Uh, I guess they hit the 7.5% mark, down 7.5%, and they had to halt the markets for about 15 minutes because they hit that level. Fed, if you haven't heard, the Fed had an emergency meeting yesterday. They were supposed to have their FOMC this week, Tuesday and Wednesday, and I believe this is kind of replacing this emergency meeting. So what transpired? They basically cut the Fed funds rate down to near 0%. They also are doing a quantitative easing of where they will be acquiring purchases for treasuries as well as mortgage-backed securities. Now, a lot of people I see out there are confused about this Fed funds rate, thinking it's mortgage rates. It's not. It's basically it's what you see your home equity line of credit. It is the what the Fed charges banks when they borrow money from them, and basically what they are trying to do is they're trying to create some liquidity in the markets by doing this, and, and trying to stimulate things so that way businesses they don't run into these liquidity issues, especially now that people might be out from work. A lot of people will be home, not having work. They may take money out of the banks, and due to that Dodd-Frank, they have limitations of what money they can give out, primarily because they have to have 10% basic liquidity. They have to have 90% uh, are tied up towards their investments of lending money out. So they may have some liquidity issues. So the Fed is trying to help them out in this type of situation with this. So some people are thinking this is mortgage rates dropping near zero, but or 2%, which is not the case. This sometimes has adverse effect on mortgage rates due to it creates stimulations in the economy, which will help drive inflation. But because inflation seems to be in a lower sector, it's not really much of a concern right now. And with the economy most likely heading into a recession with this whole situation of the coronavirus, we don't really see inflation being an issue for in the near term here. So in this situation, that won't be as much of a factor on this. So this could, in a way, help out mortgage-backed securities. However, what will definitely help out mortgage-backed securities is, of course, the purchase of the Fed buying mortgage-backed securities as well as treasuries, helping the market and creating more demand for it. Now, one of the things that we're having in an issue is capacity issues. After that, a couple weeks ago, when we had that big influx of refinances coming in there, most lenders out there jacked up their rates to fight off capacity issues. They simply don't have the capacity to handle so much new business coming in, and they're still they're losing on their servicing side of business, but they're also gaining on the other side, and they just got way too much. And with this coronavirus coming in, playing a factor, this could also play a role of things getting done from the markets closing to, uh, that hasn't nothing's been announced, but you just things are getting worse and worse, and we just have to kind of project what's going ahead. So we got people like underwriters and people in the these investors may be taking time off or having limited capacity issues of trying to be able to get the works done. Also, we have, of course, appraisers trying to go out and inspect. If we have these curfews or these type of limitations on them being able to go do their job, that might create some issues as well. So just be cognizant if you guys are in a transaction that we could be seeing some limitations and some issues, and of course we're all in this together, so we're all trying to work and hopefully get this through together in a timely manner. But just be prepared that there could be issues lying ahead as things get tighter and tighter going forward. So just be cognizant of those and be prepared on how to handle these types of situations. Okay, so let's go ahead and see how the bond market is doing. Bond market is doing quite well today. As you can see, we kind of had a little bit of a spike on Friday, which was helpful for us. Today we're actually up about 200 points. Right now we're down about 123. It's off of its earlier high, so still good news for it. But again, I checked a lot of the pricing earlier before I came into it just to make sure we're still running into a lot of capacity issues. So even though something should be at par pricing, they're still charging about 2 points, 2.5 points on those types of loans, that no point loan. Were and again, just due to capacity issues, they're trying not to bring in so much new loans, just because again they just don't have the manpower to go ahead and handle that. But at some point, it will quickly shake itself out. But when that takes place, we don't know exactly. All right, so here's treasuries. Treasuries are down, yeah, they're down from where we left off on Friday. So here's where we left off on Friday. We started much down further. Right now we're about 0.84, still below. As you can see here, we start way down there. We start down like 0.63 or so, or 65, around that range here, and now we're all the way up to about 0.84. We'll see how treasuries do, but they got more room to fall if they're going to fall at the 0.42 range here. And so technically speaking, this is kind of hard to say, but technically speaking, mortgage rates should be better today. But because of the capacity issues, we may not be. You may find a lot of most lenders out there that may not be positioned to give that pricing out, so it could be higher for them due to capacity issues. Now, however, we do have a few people we have found that are giving still pretty good pricing, so we're able to utilize those sources for our types of deals. So just be cognizant out there that you might have to do a little rate shopping or going out there and check around the few sources in this type of scenario. Not to put anyone else down, but brokers work with a lot of different people, and they might be able to help guide you in that type of things. Or these correspondent lenders, like ourselves, we're kind of a correspondent lender, but have the ability to broker. We can check who had the better price, and we can move loans into those positions. All right, so if you guys are in California looking to buy or refinance, please reach out. We'd love to be able to help you guys out. Best way to reach me is either direct message me or email me. Email will be the quickest turnaround time. Hope you guys enjoy the rest of your day. Thanks so much for watching. We'll look forward to see you guys in tomorrow's video. Tomorrow, of course, will be St. Patrick's Day. That should be, I guess, an interesting celebration, being that so many places are going to be closed and not having large groups of people around. So in any case, I hope you guys enjoy yourselves and maybe enjoy this time for reflection and have a little peace and spend time with your families and until this thing blows over. You guys have a great rest of your day. Thanks for watching. Bye-bye.